morning, good afternoon, or good evening. I have no idea what time of the day it is that you're watching this, but greetings. This is going to be our week of August 18th preview, what we're looking for the week ahead. And keep in mind, this is OPEX week, options expiration week for the monthlies. So there's quite a bit of background shenanigans that are going to be taking place. So while you are going to be trading on your zero DTEs during the course of the week, there is a little bit of a bigger picture, broader picture back there, and no need to really get into that. Anyway, here again, leaving you here on Financial Juice. This is where you can click over here on the right, listen to Tick Strike. Absolutely required if you're going to be trading from home. You can't use it on a mobile phone, but if you're trading at home, you gotta have this. No need to pay for anything. It's literally sign up, click on Tick Strike, and you can listen to the stock market go. All of your major news headlines come out of here that are worth knowing about on everything that you want to know about. And over here on your settings, you can click on what countries you want and what your importance level are. Obviously, if you have medium and low checked, you are going to get a whole bunch over here on your schedule. But as you can see on our schedule, well, maybe you can't see it, but I can. Monday, nothing. Absolutely no economic data whatsoever. Monday night, Japanese GDP, doesn't matter anymore. Chinese retail sales, yeah, sure, okay. And unemployment. Right, it's 5.2%. Tuesday, again, nothing. It's holiday over in France and Italy. They're going to eat bread and cheese, drink wine. Nothing. And then we get U.S. retail sales. Okay, so the retail sales are obviously going to be important. And like you saw with the PPI on Friday, yeah, we're still in a pretty bullish economy from a retailer point of view. Fed cash carry is going to be speaking at 11. A bald head fucknut. Wednesday, UK CPI, Eurozone GDP, housing starts, FOMC Minutes on Wednesday. This will be a little bit of a firecracker for us come Wednesday afternoon. So Wednesday, 2 o'clock, FOMC Minutes. For those that don't have the muscle memory to remember the last FOMC meeting, we had a little bit of a dip, and then we went ahead and rallied into the close. Again, nothing. Thursday, nothing. Jobless claims, nothing. Friday, nothing. So it leads us in to this week that we're going into, which we've just had 2 red weeks over on the SPX. I'll see if I can get into that in a little bit. The dip since that 4607, July 27th, is a total 3.54% to the downside. 3.54%. That's it. Range still very compressed. As you see, we are once in a blue moon getting a better than 40-point range. Once in a blue moon. Blue moon. Thursday, obviously, major day, and the worst plus 1% visit pretty much since November over on the SPX. But again, you're in the middle of a correction, so you should be expecting these things. August, 2 green closes. Thursday, plus 1%. Monday, plus 40 points. Not 1%, plus 1 point. 40 points over there on Monday. Other than that, we've been red for the month, and the month is only down 2.5%. Last week, we were down 27 points. Only a 75-point range last week. What we're trying to hint to here is this has been a dip, which is all that we expected it to be. Nothing more than a dip. And from a point range over here, or from a 1% range, we knew that we were going to get that minus 1% day going back beginning of the month. We began that month with the full moon and highlighting that we were going to get a minus 1% day. And that was the reason why we had such a major percentage win on that one day. And as you can see here, 45.13 was our close of the day. 45.30.96 was our minus 1% level. We closed below it. Safe edges broke the bottom safe edge. Jobs report last week, Friday, broke the safe edge down on the bottom. Again, we were bearish going into that. Plus 1% day was there on Thursday. We have not had a minus 1% day throughout this decline. Since we had that 46.07, we've had one that we knew we were going to get. If you're in a crash, you're getting a little bit more of this. Now, what we do have is a very clear crash taking place over on the QQQ. QQQ 3.8 or 387.98 came on July 19th. Since that day, you've had two minus 2.5% sessions. We've had a total of five. 1, 2, 3, 4, 5. 5, including Friday, minus 1% drops. However, at the same time, you've also had 5, 6, 1, 2, 3, 5. 5 plus 1% days. So your volatility is still over there on the QQQ, and the QQQ puts that we traded fantastic as we came down here to 364 on the lows over here on Friday, getting right down there at 366.24 on the close. It's been a 6% drop over on the QQQ. We took out the July lows. We are just atop the June dip bottom. We've come on the 23.6 retracement to the March low, the April low, the May low, the June dip. We've not come to that 23.6 retracement to the 2023 lows at 357. And I'll lead you into where I think, in my opinion, that's going to be coming from. So come over here onto the charts. Not going to spend too much time. I'm going to start with the VIX. This is the VIX on Friday. Like we started out mentioning there in the room, the VIX loves to get crushed on Fridays. Lo and behold, that's exactly what we got here. We had the visit above 1622 right at the opening bell, and then we just cratered down. Now, when we cratered down below 15, but we have not taken out Big Mama 1451, and we still have these two gaps down here below. 1451 is still holding for now, and 1451 is your big litmus test as to whether or not we've completed this dip, which I will tell you my opinion, we have not. But for the moment, because we have had these two red weeks, both on the SPX and the NASDAQ, we are due to have a little bit of a bullish trap. Bullish trap, meaning going into the subsequent week, the week of August 25. So I am looking for the VIX to drop down below around 1451. On that, we'll move over here, the SPX. Here's our Friday. Our lows of the day came here at 9:31 in the morning, 9:32. And for the rest of the day, we pretty much just chopped. That's not bearish, okay? Even though, it did close down 4 points, this is not bearish. This was a very good Friday, what we had. Come in here onto the major view, and you can pretty much decipher for yourself how this is all playing itself out with this bullish wedge pattern that we are due to be breaking out, as we've had a minus 3.5% decline over the course of a little bit more than 2 weeks. That's it. Biggest dip that we've had since going back over into February. But for the moment, we're looking really much that 44.35, if we do break down below the Friday lows, is about as low as we should get. And what we should be doing over the course of this week is trending ourselves back to the upside, back up to around the 4,500 range, and most likely looking for a visit during the course of the week to around that 45.25 area. Gaps are still up above, unfilled, so that's there to be questioned. But for this week, definitely looking that we should not be selling down aggressively, as these last few days, actually all of last week, was pretty much contained. And when we move over to the QQQ, from a wider point of view on the QQQ, you're looking here from your dip over here back in April. And then we've just went off to the races. We're up 36% for the year 36% off of this low over here, going back prior to this in March. 8.5% the last wave, and this has been a 6% decline as we have moved down here. Now on the QQQ, come back over here onto the week, we've still got a gap above from Thursday that needs to be filled up above 368. So again, got a really good little indicator here as to what to be looking at during the course of this week for that 368. And once again, getting a visit back up to around that 373 area. Look at it from a wider point of view with the fake prints. Nice second leg down. I can pretty much bring you on here and zoom it out. And what we've had here on this move down, a clean 1-2 or AB. And as we have slowly just been declining down here, we've made it past the 100 extension where AC would equal A, almost to the 161. And I bet you if I go in here and I put it 1.5, right there, just about come down to the 150 extension. Almost there, wedging itself down. Very, very, very much looking as if we do have a very nice completed first wave down, perhaps all of the correction, but at least a nice first wave down. So again, going to be looking there for next week. A move on the QQQ above 368 would indicate that we are going to be looking to see 373 again. So that's the initial view. Over on the SPX, again, looking at this, we'll zoom it in a little bit better. 5-day, 15-minute gaps above. That's the only ones. We filled the gap over there on Friday from Thursday. Would be looking for this to see a close above 44.75 and then progress made up towards that 4,500. Most likely up around 45.25 next week. Because again, nothing on the table for next week other than a couple of big names. The big names that are going to be reporting this week are Home Depot before the open on Tuesday, Target before the open on Wednesday, and then Walmart before the open on Thursday. Those are your three big names. John Deere, that's just one direction. Now, on these other names, if you do want to be involved in any of them, all you got to do is send me a message. I don't have a lot of these charted. A lot of these names I don't have charted. However, pretty familiar with some of them. I've looked at them before. Very happy to go over it. Not a problem whatsoever. Again, Home Depot, Target, Walmart. So bring you back over here into where we are, and we will go over and look at Home Depot. This is what we're looking at here is a 360-day, 12 hours. So you're going all the way back to the April highs, March highs, 2022. And as you can see, the progress that we've made here, coming right back up to around that 335 rejection area, where, again, looks as if it looks pretty good. And it does have a very clean inverted head and shoulders if it was to break out above this area. However, this is Home Depot, the same Home Depot that they are robbing, the same Home Depot that they are breaking into, or not breaking into, but they're literally walking in there and just taking everything off the shelves, walking out. Nobody's allowed to stop them. So Home Depot is Home Depot, not trading earnings, never trading earnings, waiting for earnings to take place. If we do get a break up above that 335, then we will see if there is a trade available that makes sense. Target woke. Target ain't woke. Target's broke. Here is your target looking at the same time frame, 360 days. Here's your high over in April 2022, your big gap down over there in May of 2022, and here you are trolling around 50% from the all-time highs. Now, we'll zoom this out a little bit just so you can get a bigger, wider picture. And this is where you're looking at over here on target, where, yeah, a drop down to around 117 would be prudent. Most likely, a drop down to around 100 would also be prudent. However, it's Target for those of you that grew up in the 90s. Don't see any reason whatsoever to A, jump in advance and get involved, B, that it would be any kind of big implications as to what we trade regularly. Walmart, new all-time highs last week. New all-time highs last week. Here were your all-time highs prior to, back here in April 2022. And since that drop-off in May, this thing has just been on a steady climb to the upside. Walmart, new all-time highs last week, up here at 162. Can't even pull anything out to give you a bigger, broader, wider view of looking for any kind of upside because it's just continued to slowly climb. No trade again, but obviously major implications when you're talking over there on your Dow Jones and your S&P 500, even though it is very small weight. So QQQ looking for something above 368, targeting 373. SPX looking for something above 4475, targeting 4505 and likely 4525. Pull up on SPY, same chart, same time frame. Again, right down here to 445. Haven't completely filled that gap down there from July 12th. However, again, seeing your wedge pattern forming here, 448 being your primary, 450, 451. That was the reason why I sent out that alert over there on the weekend or on Friday, was specifically for that. And I'll pull it up here and just walk you through it. Where did they close? They closed at 391. So at 391, and I'll even pull it up here. Give me a second. SPY 230818 call. What was it? 445s. The 1 minute chart. Yeah. Early, boom, big spike, 467 early in the morning. And then you just kind of trolled around here. So a lot of opportunities to get in a little bit lower than that 339. But again, you got this week coming up ahead of you. Buying the dip, 445 calls. Now, showing again what I was looking for, how you've got this wedge pattern formation. Very much a formation and where we are in this dip that we've been in a little bit more than 2.5 weeks. We should be looking for the bounce, and a bounce at least somewhere to around that 450, 451 area. The sooner that we get it, obviously the better for these. But again, doing math, you get up to 450, 450 minus 445 is 5. So these should go at least to $5, which will give you an opportunity there. So coming on again, back to the SPX to leave you for the end of the day. This zero DTE stuff, which, I wanted to spend the time and focus with because it is something to really take advantage to. Some guys are hitting the nail on the head and banging it. Some guys are having a little bit of a struggle with it, and it's moving here, it's moving there. And June was rough. There's no doubt. June was rough. July was okay, but June was rough. I'm going to go back to the trade of the weeks. Going to go back to the trade of the week after having had a chat with Kevin on Saturday and implementing the 32 trade program with the trade of the week, where you're literally only looking for a 30% profit. 30% profit. Granted, most of these pull up 60 to 150% when they go full credit. But yeah, looking for a 30% profit. So into this week, as we start out on Monday, waiting until we get the open on Monday, what I'm looking at are two different options here for what I would look at for a trade of the week. First option, using the close that we had there on Friday, buying the August 18th 44.60 puts and selling the August 18th 44.65 puts. Reason for that, the week ended at 44.64, 2 red weeks in a row. I'm looking for a green week. I don't care how high we go, but I'm looking for the week to close green. Not green above this close here on Friday, green above where we open on Monday. So that's what I'm looking for on Monday, is the opening print. There again, you've also got here, which is a little less risky, the 44.35, 44.40 puts. These were getting $1.45 as of the close on Friday. So these are two that I would primarily focus on to take on a trade for the week ending August 18th. And again, with it being OPEX, you're going to have two August 18th expirations. The one that expires in 4 days is the OPEX one, and you do not want that. You want the one that has 5 days and expires on Friday, not the one that expires on Thursday, even though it does have August 18th on the date. You want the ones that are for August 18th, Friday. So you want to go ahead and look over at that and pay attention to it. And with how that is working out, pulling it back over here onto the chart, SPX, again, zoom out. We've got this 44.40 gap to be filled, 3 points below where our low was on Friday. Where were we? 44.44. This is 44.40. So call it what you want. You're right up here back at the highs from back at the end of June, right? And you've got your big 44.35 pivot right there behind it. I'll pull you out here to June, looking at the middle of June, so you can see this, how it works. And right there, you're right at your highs over here from back on June 16th, right around that 44.40, 44.50 area. And that's how you can see why it looked to appear that all of a sudden the bottom has formed. You've got these two old resistance areas for our tops, and we've come down to visit that. So again, chart point of view, trading point of view, having done this for years point of view, the way that the video game works point of view, that's what we're working with. So I'll bring you on to here. 5 day, 5 minute. I'm going to load the, you know what? I'll load the day trading because that will be easier. Oh, yeah, much easier. Remove this. Don't need the RSI for what we're talking about. Your 5-day moving average. I've highlighted this for well over a week. Your 5-day moving average, your 5-day moving average. When you are below the 5-day moving average, it is your resistance. When you have surpassed it and it becomes that the 5-day moving average is below you, it then becomes support. So what we are primarily going to be looking for during the course of this week is to see that 5-day moving average be broken up above and then becoming support. From a video game algorithm point of view, as that 5-day moving average pretty much holds here for a couple of days and then starts to slowly move upwards, that also should be able to give a little bit of pressure for the S&P to head up to around that 45.25 or last week's high from the CPI report. So I'll leave you at this. That's my view for what we're going into, all right? The week after that, we get NVIDIA, all right? Me, the Ponzi scheme that NVIDIA is going back to 346. That's me. What we get on earnings, I don't know. Can't tell you because earnings haven't come out. But earnings are going to be out next week. And for me, I'm looking for NVIDIA to take a shit because it is a Ponzi scheme. It is a bunch of bullshit. You already saw it already take place over there on AMD. So I'm looking for NVIDIA to take a shit. I want to see NVIDIA back here around 346 after earnings. NVIDIA's down here at 346. QQQ's down in the 350s. However, having this discussion yesterday morning, here's Meta, here's Facebook, barely coming to 300. Still, no lower lows. Not even one fucking time a lower low since way back here in October. Nothing but higher lows all the way through. Now, again, it is an election year. There's a lot of money that's going to be spent, and Facebook and Google are the only two places that you can do any advertising. Still has not broken 300. So, looking for NVIDIA to make that big drop down there to 346 is being optimistic. But at the same time, come back to your SPX. You have Jackson Hole at the end of next week on August 25. Jackson Hole, where were we? Give it a second. I don't have it on here. I know I don't have it on here. Yep, I knew I didn't have it on here. Unhide rows, and we're going back to Jackson Hole, August 26th. Don't know what the total was for the day, but we went from 4203 down to 4057, a 150-point trading range on the day of Jackson Hole last year. Jackson Hole, it's coming. Jackson Hole, it's coming. So anyway, guys, have a fantastic day, a fantastic weekend. Get ready for the week. I'm looking for us to get a little bit of a sympathy bounce this week. Close the week green. See you in the chat room.